Good afternoon, ladies and gentlemen. I'm very delighted to be moderating this panel on regional regulatory convergence. Since the global financial crisis, I think it's been recognized globally that regulation is the third arm of economic policymaking, in addition to the traditional tools of fiscal and monetary policy. There's also been a recognition that we need to have regulatory rules to be harmonized across regions and jurisdictions in order to prevent things like regulatory arbitrage and a race to the bottom. So in this panel, in this session, we'll be discussing these issues from a regional perspective. And we are very, very fortunate to have a very distinguished panel to discuss these issues. We have the governors of the most important central banks in this region. The governors need very little in terms of introduction, but I'll do that very quickly. To my direct left is Dr. Ahmed Al-Khalifi, the governor of the Saudi Arabian Monetary Authority. To his left is Dr. Mohammed Al-Hashel, governor of the Central Bank of Kuwait. To his left is Governor Mubarak al-Mansouri, governor of the Central Bank of the United Arab Emirates. And to the far left is Governor Tariq Amir, governor of the Central Bank of Egypt. Your Excellencies, thank you very much for joining this panel. Now let's go, let's go straight into the topic of the panel, which is regulatory convergence. I'd like to ask each of you, probably beginning with Governor Amir, on why you think regulatory convergence across this region is important, and what kind of requirements your current regulatory framework provide. How does it provide the basis for convergence across jurisdictions?
Thank you very much. It's a pleasure to be here. I'm honored with my friends and colleagues and partners, the honorable governors, and with all the audience here. I think there has been a level of regulatory harmonization that has been taking place. And it's been led primarily by the Basel Committee and the Financial Stability Board, etc. And I think that there's a lot of development in regulation that we have in common so far. But we have to understand something. We need to look a little bit backwards, because central banks at the front, behind them, there is a lot of factors, sociopolitical forces, interest groups, business communities, their own markets, and their history. And we have to understand that development of regulation and independence of central banks, it is not an absolute matter. It is a factor of an environment. And if you have to realize that the development of independence of central banks, if you look in history, it has been the empowerment of central banks came more when crises took place in the West, in the East, etc. So the empowerment of central banks is an evolution process. And it has to be transformed and both by the environment and the community at large. So this is a process that we are working on, and we are inside. But we cannot say today that. But in order for we have convergence, we need to have a lot of uniformity in our different markets. What we are doing now is that we are trying in our own markets to develop. First, we were trying to get out and ensure financial stability after a series of crises that affected the world and spilled over on us. So we were doing our own homeworks inside our markets. In Egypt, the last 2 years, we were busy fixing monetary policy, fixing regulation, fixing our fiscal, and trying to restore market confidence. So this is a process that goes on for a long period of time, And it's a matter of communication with other regions. Also, there are other factors involved, is that you have monetary policy also affect regulations, and regulations affect monetary policy. And there are different regimes. You have regimes where regulators are independent, separate institutions, like in the UK. We, from our experience, our regulator being part of the central bank, helped us much managing the crisis, because you cannot disintegrate both, and there is implications and reflections from both. Also, you have the fiscal positions of different constituencies, and also you have the factor to being able to coordinate with other regulators, because it's not just about central banks. You have the capital markets, and you have other large conglomerates in your markets, and there are gaps, and we continue to work on these gaps. Thank you.
Sounds good. So, Governor Mansouri, would you like to give us the perspective from the United Arab Emirates?
Yes, thank you very much. We at the UAE, play a greater emphasis on making sure that we always upgrade our regulations to be in common with best practices like the Basel, the Financial Stability Board, OECD, among others. And I think, as you have seen in the newspaper yesterday, UAE ranked #1 in 50 indicators. So this puts more actually challenge on us as regulators really to converge. I think there is no option but to converge with international standards as we are becoming more and more open. And we want to be, as a UAE, a hub, a global hub now. We want to move from a regional hub to be a global hub with these initiatives, what we heard today from the previous speakers. So there is a lot upon us really to make sure that we always upgrade and benchmark our regulations to best practices.
Sounds good. So no option but to converge. Is that also the view from the Central Bank of Kuwait, Dr. Al-Hashel?
Yes, indeed. It is very critical, we believe, in convergence and harmonization among regulators, because we think it is an essential for creating a level playing field that minimizes economic risks and at the same time reduce opportunities, as you mentioned at the beginning, reduce opportunities of regulatory arbitrage. And I think Basel package, Basel III reforms is a very good case, an example of harmonization and regulation worldwide. But that depends on other factors as well, like the consistency and timely implementation and the minimization of national discretion in the implementation of Basel III reforms. Basel III reforms, of course, doesn't stop at capital adequacy. It also includes other important macroprudential regulation like liquidity measures and leverage ratios, and also the forward-looking perspective of risk management. And that's all has been implemented. In fact, in Kuwait, Kuwait was one of the early countries to implement Basel III reforms, the whole package, and our banks are doing very well in terms of compliance.
Sounds good. Dr. Khalifi, what's the view from Sam?
First of all, let me thank the organizers for inviting me. Briefly, my colleagues already covered the topic very well. Definitely the convergence is highly needed into the market. You want to avoid really the gaps. You want to avoid the arbitrage. Arbitraging was one of the reasons behind the crisis, as you can tell. In addition to that, for market analysts like you want to compare apples to apples, so you want really the markets implementing the same standards. I think we will converge by default if we all apply the same rules coming from the same standard setters globally. That's in a nutshell.
Can I just add that we are in terms of convergence, we are discussing among GCC governors and also Arab governors. So we have forums to discuss these and make sure that also we are aligned among ourselves.
Sounds very good. So you mentioned gaps, Governor Amr mentioned the history. Let's put them together and talk about regulation going forward. Governor Amr, do you have any gaps that you can identify in your current regulatory framework that you'd like to fill that will shape your regulatory agenda going forward?
Absolutely. Absolutely. We have a long way to go, but once you identify where you're short, I think this is a very good start, it's a very good beginning. We have different regulators, and we have been signing protocols with the capital markets regulator. We have looked at the legislation that governs banking in Egypt, and we found that it needs complete revamp. And we have, we're almost done with a new banking law, working with international legal consultants and financial consultants and auditing companies, etc. It is important to bring the market and its awareness to where the international and the globe is going. And this needs a lot of education to our communities internally. This is it's not just doing another law. You have a parliament, you have to convince them, you have the community, you have the media, you have the young people, you have Facebook, and it's quite challenging for regulators today. And our community, Egypt is a 7,000 years old country. So change is not really something that is very attractive. But we are putting a new law to implement very sharp and crisp governance into the banking system to increase competitiveness. We don't want people to feel relaxed in the banking system, because our objective out of regulation is not to just protect financial stability defend financial stability by closing the windows and by putting controls. The objective is to be able to achieve financial stability by bringing financial intermediation to the market in a real way. Because historically banks used to bank with the rich, used to bank with the big corporations. No, today there is different concepts. The concept of reaching out to the community, bringing funding to the community, and investing in the human brain. And I said this before, rather than investing in fixed assets, it is more important to develop the community and being able to tap the most precious resource in your communities. So this is a different concept of banking, and things are changing very quickly, and we are using and riding financial technology which facilitates this for us very much. So there is a lot happening anyway. I don't want to take more time.
Governor Mansouri, you mentioned that you meet other central bank governors in forums. Do these forums help you identify the gaps and set your agenda going forward to achieve regulatory convergence?
Definitely. I think we have an ongoing discussion about what is important for our regions. And I would like to stress that the more we go into international benchmarks, as my colleague mentioned, there's a lot to fix or to improve, which is we have started in the UAE. It is mainly about risk management, compliance, governance. So the more you move towards international benchmarks, which is actually lowering the capital adequacy requirement, because where we are now in terms of the status quo is higher, because we would like our banks, and this is it's not by design, it is by their decision to keep it at a high level, to make sure that they have the strength. So the moment you move these ratios lower, you want to make sure other controls are in place. Because there is no point that they continue having capital adequacy in the case of UAE, it's about 18.9%, while the regulation says only 12%. So that is good during crisis. However, there is a cost-benefit analysis that banks, I'm sure, looking at. As for the central bank, we are pushing on this agenda to make sure that our banks continue to be improved, continue to be resilient, continue to be doing business cross-border, and continue to be also cognizant of the fact that new technologies now are changing the scene, which is, I think, in the next 2 to 3 years, we will see a lot of new technologies. And I listened today to some of the new technologies like, the fintech-related blockchain, DLT, and cryptocurrency. I think the underlying technology is really beneficial for our sector, whereby could be utilized because now the customers are used to using their smartphones, so they want things as fast as possible. So these technologies will enable banks to really conduct their affairs in a more efficient way. I give you one example now. In some of the banks, which we have started implementing the national ID, they can upload your bank accounts by putting your fingerprint. So that is the way we are going in the financial sector. Technology has to really facilitate doing business across the board.
Sure. So technology is obviously a big issue and how it challenges regulation going forward. We'll discuss this in a bit. But Dr. Al-Hashel, just back to you. So in terms of the gaps that you see from your perspective in the Central Bank of Kuwait, where do you see the biggest gap?
Well, if you speak about gaps in harmonization and convergence, as I mentioned earlier, in my opinion, the most important and critical gap is the consistent, effective and timely implementation of the standards that are accepted worldwide or best practices. So that's the most important one that we have to cover. But if speaking of gaps in regulations, sky's the limit. This doesn't mean for us as a regulator to continue to tighten the screws and increase our stringent regulations. Of course, the higher the better is not correct. The higher in terms of capital adequacy or liquidity, this is not correct. This will lead definitely to inefficiencies. So it is a matter of an art that is based on science. You have to, as a regulator, you have to strike a balance. When you regulate an institution, you have to put yourself in their places in being effective in serving the community and serving the whole economy. And here you have to go back and see and observe your objective. What is your objective as an institution within that setup in that country? Your objective, your ultimate objective is to increase and enhance the welfare of the society, enhance and increase prosperity for the whole community. And to do that, you need a necessary but not sufficient condition is financial stability and monetary stability. For finance, speaking of regulation, then let's speak about financial stability. To achieve financial stability, you need the right macroprudential policy, a balanced, effective, and efficient regulation that regulate the institutions, ensures the safety, but at the same time do not stifle innovation or put impediments and obstacles in the face of bankers or financial institutions in their job in intermediating and providing funds for the productive sectors in the economy. So it's very critical for us, and we have to be very delicate in striking that balance. So it's sky's the limit, as I said, but if we implement the right regulation, if we build our capacity, if we focus more on implementation and supervision and enforcement of what we have issued, which is different, completely different from regulations. So we have to differentiate between supervision and regulation. If we do that in a balanced and efficient way, I think you will achieve financial stability, which will be a conducive for inclusive growth and would create jobs for your citizens and ultimately prosperity of the society.
So that's very interesting. Financial stability does not mean suffocating the economy with
Of course
ever
not.
higher regulatory tools. And convergence, if anything, could mean even more relaxed capitalization ratio, as Governor Mansour has mentioned. Is also the view from Saudi Arabia, or is it things are different there?
I kind of agree with Governor Al-Hashel. There is no perfection point, by the way, when it comes to regulation. And if you go and ask the banking community, they are fed up with more regulation. But that's why we have, in order to close the gaps, that's why we have Basel 1, 2, 3. But it looks like the regulators now also are convinced that Basel 3 will be the ultimate destination. At least there is no talk about Basel 4, which is good, by the way. Gaps will emerge, and the unfortunate thing that you cannot discover the gaps until late. And so I cannot tell you really if there are gaps, but if there are gaps, definitely will be closed. But for me, I'm fully convinced that the current regulations are sufficient to deal with the gaps.
Sounds good. So this region has benefited a great deal, and we'll stick with you, Dr. Al-Khalifi, has benefited a great deal from a large inflow of capital from outside the region. Obviously, that capital came, and that's useful for multiple things in the region, but it also comes with risks, both on the way in, but also in particular if there is a risk of a sudden reversal of that capital. Can regulation play any role to minimize this risk, or is it completely a different game?
Well, speaking of the Saudi market, we have complete freedom of movement of capital in and out, and we never thought about regulating the capital. We never think that regulation will take care of capital or to put capital control. I think, again, it was mentioned by the Governor Al-Hashel, fundamentals are very important, economic fundamentals. And that's what we need really to put in place in order to attract more capital flows and to deter any movement, large movement, I'm talking about large movement of capital outflow. Of course, let's not forget that structural changes are very important, and specifically the financial markets. And that's what we need in our area, in Saudi Arabia and in the rest of the markets in the region. We need to deepen our markets, really, and we need to put more transparency and more also discipline. And discipline and the transparency, by the way, we need it also more in the fiscal side. That's what we had in the last 2 years in Saudi Arabia as well. Moreover is, of course, and more related is more and closer, I would say, not more, closer macroprudential measures and monitoring. And again, that's what we do in SAMA. If you ask any bank in SAMA, they will tell you SAMA is a conservative. In fact, we deny that and we say, no, we are not conservative, but we are closely monitoring the situation. And luckily, so far, we are succeeding in that.
Dr. Hashel, can regulation play any role in minimizing the risk of inflows and outflows?
Of course, but I think we have to take a holistic and look outside the box. You have to look and dig deep into the fundamentals of your question and the source of those inflows. Capital inflows are good for the economy if it depends on many factors. If they stimulate the economy, if they smooth income of consumers, if they finance investments, then they would be of an added value to the macroeconomic picture. So it depends on the size, it depends on the destination of those funds, it depends on the duration, and it depends on stability. At least 4 elements I can identify now that tell you about the benefit that you can gain out of capital inflows. If the capital is going to productive investments and productive sectors in the economy and stays for long, then it's beneficial for the economy. So you have to dig deep and see where's capital coming from and where is it going to. Back to your question, In our toolbox, as a central bank plus regulator, you have tools in your monetary policy, and there you can do capital controls, which is, I'm not advocating, but you have that tool. And you have also macroprudential, as a regulator, you have the macroprudential tools. In the macroprudential tools, there you can control the sectors that capital goes to. If you have, for instance, if you have loan to deposit ratios, if you have loan to value ratios, if you have ratios like liquidity and capital adequacy ratios, those measures would minimize, if they are set correctly in an efficient, again, way and in a prudent way, then they will deter the inflow at the first place. And then you're not worrying about that hot money to be reversed and to leave the economy and lead to disturbance in the economy. So I think before thinking of reversal of capital, when inflows come to the economy, you have to ensure that those funds are going to the right sectors in the economy, well utilized, beneficial for the whole community and investment climate. And then if they are invested correctly and in a safe way, then you're not worried about the reversal of those funds later on.
Absolutely. Inflows are also risky in the same way that outflows are. Governor Mansouri, what's your view from the UAE? Is regulation part of the toolbox to minimize the risk of capital flight?
I think the UAE has learned the lesson from the last financial crisis. And as a result, we have developed our regulations so that, there isn't that excessive exposure or inflow into certain sectors, i.e. we have defined what are the maximum sector exposure. We have defined LTVs. We have defined maximum burden ratios. So all these contribute to stability. All these contribute to a well-designed capital flow to make sure that the flow of capital is, as my colleague Governor Al-Khalifi mentioned, we are a free inflow and outflow of capital country, and we are fixed with the dollar in terms of currency. So our options are limited, which means we have to revert to those macroprudential tools. And also now there is, as part of the Basel III, is what we call the counter-cyclical buffers, where you set at 0 to a percentage based on the evolution of the economic growth.
Okay, that's very interesting. So Governor Amr, Egypt has been a huge beneficiary of capital inflows since the float of the currency in November 2016. Now you started your monetary easing cycle with a 100 basis point rate cut in your last meeting. Mm-hmm. Do you think that you could use regulatory tools in order to prevent the capital flight if that risk materializes at some point? Or are you going to not use these type of tools at all?
Well, like the governors were saying, that we work on the fundamentals, okay? And that's what is sustainable, okay? Matters in the international market change from one week to another, and they reverse. We've experienced over the years capital flight, and then after 1 week, they go back, You cannot, you have to work on the fundamentals, and this region has a very solid track record. This region is quite diverse. It has a diverse economies. Its economic growth levels over the years compared to other regions has been on top. Its balance of payments figures and performance has been very good. Its inflation levels has been, comparatively speaking, with the world, stable and low. Its fiscal situations, etc. So this region stands out, and this region did not default. This region has a very strong performance record, and it continues to be dynamic. And in terms of regulations, we are all there in terms of Basel I, Basel II, Basel 100. But we, like the governors were saying, we are trying to, we're not trying to adopt and imitate. We're trying to understand what's our mission. And our mission is to make sure that these markets are able to unlock their potential. So regulations are not controlling and inhibiting and hindering. They have to be enabling. Sure. Thank you.
Sure, thank you. So I think we'll have some time to take questions from the audience. Please raise your hand. I think there are mics floating around. We'll take 3 questions and allow Their Excellency the Governors to answer them. This gentleman over here. Yeah.
Good morning, everyone, and good morning to all Your Excellencies. My name is Nicholas Gilani. I have a question. Except for the government of Kuwait, the UAE and Saudi exchange rates against the dollar are pegged. I'm not so sure about Egypt. The United States rate of inflationary pressures is upward, and the Fed is increasing the rates, especially with Janet Yellen leaving. Would you foresee some sort of a pressure on the pegged currencies of UAE and Saudi? Thank you.
Okay. 2 more questions we could take. Please raise your hand if there are any.
There's one there.
There is, yeah.
In the back.
And there's one at the back. So this gentleman here and this gentleman at the back. We'll start there.
This is to, all Their Excellencies, the governors. In terms of risk recognition, particularly credit risk and market risks, how comfortable are you with the situation that's prevailing? Because it's a movable feast. Just wanted to get your views.
Okay, and the gentleman at the back.
Thank you, Ibrahim Raskala from Barclays. The regulatory environment over the last 6 or 8 years has evolved in a very benign international environment, low international rates, large capital inflows. Now Basel III is coming, the Fed is hiking, the world may be changing. So how are you looking at changes in your own regulatory environment with all these changes?
Okay. So we have 3 questions. I'll ask each of the governors to answer any of them, and I'll add one more question in technology, because technology seems to be attracting a lot of attention. Is technology making regulation easier or more difficult? Is it creating hindrances? Is it increasing financial inclusion? I'll start with Dr. Khalifi. So we have a question on the Fed rate hike and the impact on the PEG, credit risk, and change in regulations.
With regard to the exchange rate arrangements that we are following, obviously the gentleman knows the situation that we are pegged to the dollar, and absolutely we are following the developments in the market, particularly the Fed moves. So whenever the moves happen from the Fed, we still have enough tools to deal with it, in addition to the fundamentals that we talked about earlier. By the way, in early 16, the fundamentals were probably weaker than what we have right now, particularly in the oil market. So the pressure would be much less on us.
Any word on technology at all?
I don't know what you mean by technology. Technology definitely is disturbing I would say our behavior as central bankers. Usually we want to be traditional, but unfortunately we cannot be. So we want really to be ahead of the curve all the time, and we want really to employ the technology, particularly in the payment system, and that's what we do in Saudi Arabia. Since early 80s, we are adopting the latest in the technology. That's why we also recently began to use the blockchain, whether in collaboration with the United Arab Emirates Central Bank right now, we are talking about it, or internally.
Okay, that's very interesting. Dr. Al-Hashel.
Well, in our situation in Kuwait, as you know, our FX regime, our currency is pegged to a basket of currencies, major currencies that we have trade and financial relationships with. And that gave us a relative flexibility, and it served us very well during the past decades. In fact, we exercised that relative flexibility in the past 2 hikes from the Fed back in June and December 2017, in which we did not increase our policy rate in order not to increase the cost of borrowing at a time when you want to stimulate the economy and encourage private sector participation and provide funds to SMEs and other corporate and consumers as well. But at the same time, you have a daunting task of maintaining the attractiveness of your currency and maintain a positive spread in favor of your currency compared to the major and most important currency, namely the US dollars. And to achieve that objective, which is conflicting with the previous objective, and this is the dilemma, to achieve that objectives, we increased our yield curve using our instruments, CBK instruments, as well as the treasury instruments, in order to provide and pay more to buyers, namely the banks, buyers of our instruments and treasury instruments, and give them enough room in terms of profits and incentives to pay higher to depositors. By doing that, combining these two instruments within our monetary policy tools, we allowed, as I said, to provide funds, hopefully with relatively cheaper cost of funds to borrowers, and at the same time allow banks to pay higher rates to depositors in order to maintain the attractiveness of our KD and maintain funds locally and avoid any migration of capital. In terms of technology, technology is the future, no question about it. And we have to be proactive, not only reactive to that. We have to build our capacity. I don't blame the audience when they say a high percentage on the question about the mindset of regulators. Indeed, that's not an easy thing to do. But it is a must that we have to be conducive for that. We have to allow for it, and it's the future. Unfortunately, for us, it doesn't come a plain vanilla one-way benefits. No, there is a cost benefit. It comes with risks and bundles. And we have to do by mandate, according to our mandate that I mentioned of ensuring financial stability and monetary stability, you have to, if you cannot avoid the risks, then you have to manage and mitigate those risks. Because you are, at the end of the day, you are responsible for the safety and providing convenient product and service, but at the same time safe to the society. Because if there is anything happen, if things turn south, then people will be blaming you, and you'll be responsible for any hazardous or damage that happened to the trust or to the financial, the whole welfare of the society.
Sure. Governor Mansouri, do you have a view on any of the questions on credit risk, on the PEG, on technology?
Let me take the credit risk first, because this is a new phenomenon in UAE in terms of how banks are giving credit, which has improved tremendously recently due to the Etihad Credit Bureau. So this has really contributed to better credits, which in essence contributes to lower cost of capital, because different people will get different rates based on their profiles. So there is a positive trend there. When it comes to the fixed rate regime to the dollar, this has benefited, I think, the region and UAE in specific over the years. In terms of our stand on that, that's continuing. There is no change. Inflation, I think it was mentioned, inflation is still benign in the UAE. I think we recorded, or we are estimating at 1.8% for 2017. In terms of, I don't remember the question over there, but I'll talk about technology or fintech. I agree with you, Ali, we don't understand fintech as regulators. However, if you don't understand something, you don't jump into it. So that's one. But I think cybercrime should be highlighted, because this is, the more we digitize, the more we go digital, we need to be careful about that. And I know there are a lot of efforts into that direction. It might help us as regulators in terms of technology, because I give you one example, and that's maybe more relevant to people who are investing. Now you could get market pulse on the spot, rather than waiting for that statistics bureau to give you a report at the end of 3 months. This makes a huge difference in the decision making, whether it's a central bank or an investor.
Absolutely. Governor Amir, I guess the question on the PEG is not really relevant to you. Let me ask you about technology. Let me ask you about something particular in technology, because we covered different dimensions of it, but there's an element that everyone's interested in, although this audience seems to be skeptical about, which is Bitcoin and cryptocurrencies. What is your view on this?
Well, what we're doing on technology is that we created a fintech division at the central bank to try and understand what's going on. And our view is that we have to embrace what's happening and be partner within this. So what we're doing is that we're communicating now with the entrepreneurs and the innovators and the players in this industry, and trying to see the opportunities and work together with them. We believe that the environment is changing very quickly, and technology is changing a lot of things, and we cannot keep defending our position in terms of the classical banking models that we had. I'm concerned about disintermediation of the banks, and it is very important. So what we're doing, raising the awareness of the banking system and asking them to get involved and be part of it. Of course, the concern that what we need our eyes to be very open in terms of the risks, okay? And what we need to do is that we are using the specialists of this industry. We are using the specialists and the experts and the best experts, and we are walking in this direction as we go slowly. In terms of the credit risk, I'd like also to give a comment, yes. Because in Egypt, the credit risk is good because of a number of factors. First, because of the levels of growth. Second, the size of the economy and the market. Corporates are growing very fast. They're making a lot of profits. So this, of course, is the best protection in terms of credit risk. But also, the other thing is that both borrowers and lenders, they learned the lesson from non-performing loans. Today, we have 5% non-performing loans in the banking system is 5%. So, and this, of course, is very good. So, the credit risk is not a concern anymore. I think everybody, the level of awareness has really risen tremendously.
Well, fascinating discussion. I'd love to continue this, but I'm afraid we'll run out of time. Please join me in thanking our distinguished panelists for a very insightful and informative session. Thank you very much, Your Excellencies. Thank you.